If you're going to be unemployed in somewhere in the country, I think it's better to be unemployed in Alberta than Ontario or BC. What's the ratio of employment to unemployment? I still think that 6.5% unemployment is still a healthy number. It's not a big concern.
Toronto condo market backs off. Those people are starting to come outside of the Toronto area to work. They're now coming out and they're working on single family homes in Markham or in Peterborough. We are seeing the Toronto trade companies come and bid on those jobs. That never happened before.
We got a whole issue because people, if their wages don't increase, the affordability of a home becomes, insurmountable, and that's what we're bumping up against.
Employment, unemployment, what's shaking there? I know there's quite a few, as you can see now, we're finally, I don't want to say what I like this. I don't necessarily like this, but coming out of COVID, the entire country was just moving in one direction, which is like everything was, up and to the right kind of thing. It was like, but now and we talked about this several months ago, where now you're really starting to see the disparity between different provinces. Some provinces doing better than others. There's no doubt about it. And even within that provinces, we have to remind people, Patrick, real estate is regional. We're not saying real estate is provincial, because it's not. It's regional within the province, but there's no such thing as a Canadian real estate market. There's no such thing as an Ontario real estate market. You have to go within the actual municipalities and even sometimes dig a little deeper than that, especially if you're in the GTA, which is a massive part. But Patrick, connect that to unemployment, and then let's talk employment. I know you got a couple great charts here.
Yeah, a couple of, I got thinking about it as I was putting this all together. When we look at, one of my frustrations is, do we trust the unemployment numbers? Do we trust the data we're getting? That's one aspect of it. And primarily it's lagging. So I want to know what's going on in a more current form, if you will. So then I look at unemployment versus employment, how many people of the workforce are going for, and how many of the workforce are actually working. And those numbers are a little bit, they're tough to read. They're tough to understand, so we start to see that our employment is down a little bit. Our unemployment is up a little bit. But then I said, well, one of the things that I want to do in terms of comparison, how do we look at the employment number and see what we think of it? What does it mean to us? And so when we start to see that employment coming down and unemployment rising up, we start to see a differential that we need to pay attention to. And what I did was I said, well, what's the ratio of employment to unemployment? So I started looking at that particular ratio, and we start to see that as much as unemployment is ticking up, and by the way, JG, you and I have had these conversations many times. I still think that 6.5% unemployment is still a healthy number. It's not a big concern. It is a flag. So if we start to go above that, we start to go, okay, things are a little bit of a concern. But the ratio really shines the light on the fact that, yes, the ratio between employment and unemployment has shifted, and it's not as strong as it could be and that we'd like it to be, but it's not off the charts bad. Having said that, we are in fact starting to see where it is ticking up, and we got to pay attention to it. And so we go back to Alberta, where we saw, I think, 7.5% or whatever that number was. It was over 7% of unemployment. The reality of it is, in Alberta's case, so many people moving into that province. It is the inevitable, or the illustration, metaphorically, filling the glass with water. You fill it and then it gets full, but you keep pouring water into it. Well, it's going to come out the sides. That's what's happening in Alberta. There's just not enough jobs to accommodate the sheer volume of people that are moving into Alberta. And they're moving into Alberta because of affordability more than they are even jobs. So if you're going to be unemployed in somewhere in the country, I think it's better to be unemployed in Alberta than Ontario or BC, just from a cost of living point of view. And I think we need to look at the next chart, or one of the charts that we have on affordability. So that's the point of around the employment-unemployment ratio gives us another view of what that means to us and what's happening economically.
Interesting from a business owner's perspective, Patrick, and I know you always look at it from this perspective as well, having owned many businesses, and you still do. But like you said, 6.5% for hiring. This is a great time to be hiring, and we're finding great people. There's lots of flexibility there. It's absolutely fantastic. I mean, if we could stay right here, this would be fine by me from a business owner perspective. And I'm certainly not seeing. I mean, we have we got 200 and some odd plus doors, and I haven't heard a single, like, there's nobody that's having a hard time. Not in my market. Now, other people are in different markets, but the market we rent to, I'm not seeing any particular job loss. I'm not seeing anybody struggling to find work. I'm not seeing any delinquencies because of that. We also have a commercial portfolio we own and we manage, and I'm seeing much more business turnover there, where businesses start, try for a year or two, don't make it, but that's pretty normal. I mean, within 5 years, 95% of businesses don't fail, or do fail, I should say. So, anyways, that's kind of my feet on the street view of what we're seeing here. But I'm not renting to the lower portion of them. They might be more at risk of unemployment.
Well, we know that right now we're going to see an uptick in construction. That's the lag that's coming through. So construction jobs, at the end of the day, when we look at what's going on in Toronto, when we look at Ontario overall, and Vancouver, I mean, Alberta's the only exception to it. Nobody's building that detached world, right? That semi-detached and detached world. There's very few buildings going up. Toronto's shut down in the condo market for now. The math doesn't work. They can't make it work, so they're just shut down. Anything coming online in the condo market is been online for already 3 or 4 years, so they're coming to fruition in that. But that condo market skews a lot of the data that we're getting. Having said all of that, what we're going to see the tick up is, in fact, the construction jobs are going to start to get far softer. We'll see unemployment in that sector tick up. I have no doubt about that.
Do we have data? Do we have data on that, Patrick? Because I have a bit of a, let me take the other side of that argument for a second, which is, for so long, and I'm going to speak specifically to Ontario right now. For such a long time, it was so difficult to get trades, and there was such a trade shortage that, number one, it held back productivity. There's no doubt about it. My point is that as the specifically Toronto condo market backs off, I know what's happening because I'm seeing it in my markets. Those people are starting to come outside of the Toronto area to work. They're not doing the condo buildings anymore. They're now coming out and they're working on single family homes in Markham or in Peterborough or wherever the case may be. And by the way, there's a ton of building going on in the markets that I represent. We are seeing the Toronto trade companies come and bid on those jobs. That never happened before. Okay, first of all, that never happened before. So what I'm saying is, we had such a backlog of people needing tradespeople. What I'm seeing is actually that the market is absorbing the surplus from Toronto. They're not going to go on unemployment. They're just going to go into the other markets. And yes, they're going to get paid a little less. And yes, they're going to drive a little further, but they're making it work. And I'm seeing more of that than I am unemployment in the construction sector right now. And jobs are getting done. Projects that typically you'd have to wait, 8 weeks to get an electrician, boom, you can get an electrician in 2 weeks. Like, it's back to normal, not mass unemployment. That's my argument to this concept.
Yeah, I think I'm not disagreeing with you, but I think the absorption isn't going to be enough. So you're making a really good point, and I don't want to step over it because absorption is a big issue. I just don't think that you're going to, when you look at the volume of construction that it takes to build these buildings and do what they were doing leading up to this point, you're just going to have a lot more jobs. It's going to be a little bit like Alberta, where you're going to be pouring a lot of these people into other sectors or into other regions, but the absorption is not going to be there. So we'll see an uptake. I don't have data right now to support that kind of view of the world, but I do have it somewhere, and we are seeing it tick up. Again, this is all part of, the other side of this coin is then you look at the port strike. And I want to say is that port strike, if it continues, you're going to see more inflation. You're going to see a shortage of goods. Toilet paper is going to go up. I mean, all the things that are happening. So I joke about that
Are
all
we
the
going to
time.
start hoarding toilet paper like last time? Is that
Probably.
what's going to happen?
Well, I think that's probably one of the reasons that mainstream media isn't talking about it. I think there's some, let's not put this out there or we're going to have a run on stores. I don't know, but that would be one reason that they don't do it. So the point is, we're going to see some inflation. The unemployment ticking up, or the unemployment employment ratio not getting out of control. In other words, we're still a little bit soft, will really support the cost of salaries being worked into the things that we're doing. So wage growth won't go up. Now, on the other side of that, we got a whole issue because people, if their wages don't increase, the affordability of a home becomes, insurmountable, and that's what we're bumping up against.
But could you pay me in advance?
Again, I go back as investors. For those of us who can raise capital and see the way to invest in real estate, we become the rental housing providers, and that demand will continue. Although rents are softening right now, JG, you know that. We're starting to see a softening of rents. It's not like the bottom's falling out of the rental market.
Let's definitely talk about rents because I've seen that. I did a rental market update, a couple of weeks ago, and that's exactly what we saw. And by the way, we saw that essentially like late part of September into the late part of October. It has rebounded in my markets. It has rebounded a little bit. Definitely, there was a bit of a lull there for about 6 weeks where we had to bring prices down by $50, $60, $70, sometimes $100. And I do want, for investors listening to this though, keep in mind you're starting from a very, very, very high bar here. And and that was the point of my rental market update, Patrick, because I was telling investors, like, let's not freak out here. Yes, we've hit the ceiling of limitation on rents, but let's not freak out, and let's not throw the baby out with the bathwater. Just because rents got to come back down $50, $100, and take a temporary breather, even if if they stayed there for another year or 2 years, it's still a very, very high bar, and you can still do really, really, really well in real estate. But people see that the rents are falling and they freak out. That's not the reality of how these numbers actually play out. But you are 100% right. And I got to say, Patrick, when I put up this chart here on the screen, I was pleasantly surprised that actually the data I'm seeing feet on the street matches really, really closely to that data being published, which is not always the case, if you know what I mean.
I do. So the point is that we need to carry on. So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.